Imagine waking up tomorrow
Yeah.
and 25% of the world's flour supply has just vanished.
Just poof, gone.
Right. Gone overnight. Think about the immediate chaos that would trigger for, every bakery, every grocery store, and every pizza joint on the planet.
It'd be absolute panic.
Exactly. And starting next month, that exact scenario is actually playing out in the real world. But not with flour. It's happening with a highly specialized, almost invisible ingredient that is absolutely required to manufacture the advanced microchips powering whatever device you are listening to right now.
Yeah, a quarter of the global supply is simply about to evaporate.
It's wild. So today's deep dive is all about unpacking this. We're looking at a permanent structural shutdown of a massive chunk of global capacity.
And the ripple effects are, they're already tearing through the trillion-dollar tech industry. It's literally altering the physical reality of how we build computers.
To understand how we arrived at the edge of this supply chain cliff, we've pulled together a remarkably diverse stack of sources for you today.
It's a really interesting mix.
Yeah, we are breaking down a 2024 integrated report directly from a Japanese chemical giant called Central Glass. And we're layering that with some deep financial analysis from Koala Gains, Breaking Tech, and market reports from Sunsers, WC Tech, and TrendForce.
And we're also capturing the raw, real-time market sentiment.
Right, from KuCoin and some tweets from a financial analyst known as Serenity.
Synthesizing all those sources really gives us this complete autopsy of a supply chain collapse. We get the corporate strategy, the chemical realities, the financial desperation, and, the geopolitical catalyst all in one view.
And actually, just a quick heads up for you listening, our stack today inevitably touches on some intense geopolitical trade restrictions.
Right. Specifically, export controls involving China, Japan, the U.S., and South Korea.
Exactly. And we really want to stress that we aren't here to pick sides or endorse any political maneuvers you'll hear about today. Our only job is to impartially unpack the math, the chemistry, and the factual market dynamics.
We just want you to understand what actually happens when a tech supply chain fractures. The politics simply set the stage. Our focus is entirely on the mechanics of the fallout.
Right. What it physically means for the technology we all rely on. So let's just start with the material itself, because before we can understand the market panic, I think we need to understand the chemistry.
Definitely.
What is this missing ingredient that has the world's biggest semiconductor fabrication plants scrambling right now?
So the chemical is tungsten hexafluoride, or WF₆, though in the semiconductor industry, it goes by a much more visceral nickname. They call it chip blood.
Chip blood. That implies the system literally dies without it.
It absolutely does. If you are manufacturing advanced microchips, and we are talking like 7-nanometer processors, high bandwidth memory, ultra-dense 3D NAND, you rely on a manufacturing technique called chemical vapor deposition.
Or CVD, right?
CVD. And WF₆ is the foundational material for that specific process.
Okay, let's unpack this for a second. So if a modern 3D NAND chip with, over 200 layers is essentially like a microscopic 200-story skyscraper, I'm guessing WF₆ is basically the plumbing and the wiring that connects all the floors together.
That is the perfect mental model, seriously. When you stack transistors 200 layers high, you obviously need a way to pass electrical signals vertically through the whole structure.
Right.
So the industry builds these microscopic vertical tunnels called vias. They are essentially the elevator shafts of your skyscraper.
Okay, that makes sense.
But you can't just pour liquid metal down a nanoscale shaft. The physics just don't work at that size. Instead, you pump tungsten hexafluoride into a high-heat vacuum chamber as a gas.
It's a gas.
Yeah, as a gas. It seeps into every microscopic crevice of the wafer, and then the heat triggers a chemical reaction, stripping away the fluorine atoms and depositing this flawless, atom-thin film of solid tungsten metal onto the walls of those vias.
Wow. I have to ask, though, why tungsten specifically? Why can't TSMC or Samsung just pipe in, copper or aluminum gas and get the same result?
Well, what's fascinating here is the unique thermal and electrical profile of tungsten. It has incredibly low electrical resistivity.
Meaning what, exactly?
Meaning data signals can move up and down those microscopic elevator shafts at blistering speeds without losing fidelity. But more importantly, it has an astronomically high melting point.
Oh, because advanced AI chips generate a massive amount of heat, right?
Exactly. A massive amount of localized heat. If you used a softer metal, the internal wiring of the chip would literally melt itself under a heavy computational load.
Oh, wow. And I'm guessing the deposition process itself has to be pretty flawless.
Flawless to the atomic level. Tungsten has this unparalleled ability to fill those nanoscale gaps without leaving any tiny voids or, like, air bubbles.
Because if the wiring in your 200-story skyscraper has even a microscopic gap.
The electrical current hits a wall, the power goes out. Tungsten ensures the circuit connects perfectly every single time. Without it, you don't have a cutting-edge processor. You just have an incredibly expensive, useless block of silicon.
Which brings us to the crisis. We have this absolutely vital chip blood, and a quarter of it is just vanishing.
Right.
According to the breaking news from Sunsers and WC Shavtech in our stack, the root cause originates in China. China currently controls roughly 80% of the world's tungsten resources and refining capacity.
Which is a huge monopoly.
Massive.
Yeah.
And starting in January 2026, China halted all exports of high-purity tungsten powder, specifically to Japan.
And the supply chain math here is just brutal. Tungsten powder accounts for 60 to 70% of the total production cost of WF₆.
Wow.
Yeah. For decades, the system operated seamlessly. I mean, China mined and refined the raw powder, then shipped it to Japan.
And then the Japanese chemical giants, specifically Kanto Denka and Central Glass, they possess the highly specialized technical expertise to take that powder and synthesize it into the ultra-pure WF₆ gas.
Exactly, which they then sold to the global chip makers.
But the moment the powder stopped flowing, that entire delicate ecosystem just seized up.
It broke overnight.
Yeah. These two Japanese suppliers basically burned through their existing powder inventory for about 5 months, and now the clock is officially run out. They've notified industry titans like TSMC, Samsung, and SK Hynix that as of July 1st, 2026, they are permanently halting WF₆ production.
We are talking about wiping out an estimated 2,000 to 2,200 tons of global capacity practically overnight.
Out of how much total?
The total global capacity for this gas is only about 8,000 to 9,000 tons.
Oh my God.
Right. Losing a quarter of your most vital resource in a matter of weeks is a catastrophic shock to any industry, let alone one as finely tuned as semiconductors.
I really want to look closely at Central Glass for a second, because we have their 2024 integrated report in our sources, and there is an almost painful irony hidden in these pages.
Oh, absolutely.
The company's leadership spends dozens of pages outlining their strategic vision for 2030. They boast about their grand transition into a specialized materials company, and they lean incredibly heavily into this concept of monozukuri.
Right, monozukuri, for those who don't know, it's the traditional Japanese philosophy of meticulous, high-quality manufacturing. It's about craftsmanship, continuous improvement, absolute precision.
It's beautifully crafted corporate poetry. The report details how they will leverage monozukuri to solve global environmental issues, create high added value, and completely dominate the specialty chemical market.
But all of that world-class manufacturing philosophy, all of that meticulous planning, completely collapsed.
Yeah.
Because they didn't actually own the dirt they were building with.
Right. They relied on a single geopolitical rival for the foundational powder.
But let me play devil's advocate here for a second.
Sure.
If this material is the literal lifeblood of the tech industry, and you know you rely entirely on foreign imports, why didn't these massive chemical companies or even the Japanese government just stockpile the tungsten powder years ago?
It's a great question. And the Sunsers report dives into the physical reality of the material to explain exactly why a strategic reserve was never really an option.
You cannot stockpile high-purity tungsten powder the way a country pumps crude oil into, like, salt caverns for a rainy day.
Why not?
Tungsten powder is highly reactive. If you store it in a warehouse, it inevitably interacts with trace amounts of moisture or oxygen over time. It degrades, it oxidizes.
So it basically creates microscopic rust.
Essentially, yes, microscopic rust. And the purity standards for semiconductor manufacturing are so extreme that if you try to synthesize WF₆ gas from powder that has even a fractional hint of oxidation, you carry that contamination into the gas.
And then into the chip.
Exactly. When you pump contaminated gas into a pristine silicon wafer, you ruin the entire production run. A single bad batch of gas can destroy billions of dollars of wafer inventory in an afternoon.
Wow. So the logistics of maintaining perfectly climate-controlled, vacuum-sealed storage for thousands of tons of ultra-pure powder must just be economically suicidal.
It's financially and practically impossible. I mean, the entire global tech industry was built on the premise of just-in-time delivery of fresh, perfect raw materials. The moment the fresh delivery stopped, the Japanese factories were doomed.
Man. So Japan is off the board. 2 major suppliers are permanently gone. That immediately shifts the spotlight to the downstream victims and the companies scrambling to fill this massive void.
Right, the vacuum has to be filled.
In our sources, there's a fascinating KuCoin post analyzing a tweet from an analyst named Serenity, and they compared this 25% supply bottleneck to shutting down the Strait of Hormuz for the oil market.
It is a phenomenal analogy. I mean, the Strait of Hormuz is the narrow geographical choke point where a huge percentage of the world's oil flows.
Right.
You block it, and the global economy panics. The semiconductor supply chain just lost its own operational Strait of Hormuz.
So who steps in? The immediate beneficiaries of this panic seem to be South Korean companies, specifically SK Specialty and a company called Foosung, which currently holds about 10% of the global supply chain.
Yeah, they are the ones picking up the pieces.
But with Japan out of the picture, these South Korean firms aren't just, politely stepping in to help out. Here's where it gets really interesting. They've already notified the biggest chip makers on Earth that they are jacking up WF₆ prices by 70% to 90% for 2026.
They hold all the leverage now, and they are using it aggressively. The chip makers really have no choice but to pay. But this is where the Koala Gains financial analysis becomes absolutely crucial to understand.
Oh, yeah, I was looking at that.
Right. If you only read the headlines, Foosung looks like the ultimate winner, just positioned to print money. But their fundamental balance sheet paints a much more precarious picture.
Yeah, the market is crowning them as the saviors of the supply chain, but the numbers suggest they might be standing on a trapdoor.
Exactly. The Koala Gains report points out that Foosung is operating with a current ratio of just 0.86.
Which means
They literally do not have enough short-term liquid assets to cover their short-term liabilities.
right.
If all their bills came due today, the company would be insolvent. Beyond that, they're carrying 403 billion Korean won in debt. They have a history of severe cash burn, and their recent return on equity was a staggering negative 25.1%.
Okay, I had to challenge the market sentiment here then. So is Foosung actually a strategic mastermind company finally getting its due? Or are they just a highly leveraged, financially struggling firm getting incredibly lucky because their Japanese competitors were regulated out of existence?
The Koala Gains analysis validates that skepticism completely. The broader financial market has already priced Foosung stock for a flawless, perfect recovery.
Of course they have.
Yeah, their EV to sales multiple is hovering around 2.7x, which is the premium they commanded during their absolute peak historical performance. Investors are just blindly betting that these 70% to 90% price hikes will instantly flood the company with cash and fix their toxic balance sheet.
But the execution risk to suddenly scale up production of a chemical that's volatile has to be immense, right?
The risk is astronomical. Think about it. The market is asking a company with poor liquidity and massive debt to suddenly scale up the manufacturing of one of the most difficult, sensitive, high-purity chemicals on Earth.
It's a tall order.
To do that, you need to build ultra-clean new facilities, maintain massive pressure vessels, hire specialized chemical engineers. One operational hiccup like one contaminated batch that destroys a client's wafer run, and Foosung's fragile financial foundation could shatter entirely.
Wow.
They are the beneficiaries of the crisis today, but they are absolutely not an impregnable fortress.
Okay, well, if Foosung is in such a precarious financial state,
Yeah.
and SK Specialty is out here gouging prices by 90%, it begs the obvious question. China has 80% of the tungsten resources.
Right.
Why don't TSMC and Samsung just bypass the South Korean middlemen and buy the finished WF₆ gas directly from Chinese suppliers?
Job solved. Well, on paper, China absolutely has the manufacturing capacity to step in. The TrendForce data in our stack shows that Chinese chemical companies, specifically CSSC Sci-Tech, have aggressively ramped up their domestic production capacity to around 4,500 tons per year.
That's nearly half of the world's total supply.
It is.
But the TrendForce report also highlights that buying from China is no longer a cheap alternative. The price for Chinese 5N grade WF₆ is up 232% year over year.
Yeah, it's skyrocketing.
And if you want the ultra-pure 6N grade, it is currently going for a staggering 2.2 to 3.0 million RMB per ton.
And those grades are really critical to understand here. 5N grade means the gas is 5 nines or 99.999% pure.
Okay.
6N grade adds just one more 9999999% pure. That single extra microscopic level of purity costs millions of dollars more per ton, because that microscopic difference is literally the line between a functioning AI processor and a piece of expensive garbage.
But even with those skyrocketing prices, TSMC can afford it. So what is actually stopping them from just placing an order with CSSC Sci-Tech tomorrow?
The immovable barrier is a structural reality of the semiconductor industry known as qualification time.
Qualification time. So I'm assuming that isn't just like getting a regulatory stamp or signing some vendor paperwork. Are they physically having to test this new gas on atomic structures before they trust it in a multi-billion-dollar fab?
They are running it through an absolute gauntlet. You cannot simply buy a tank of highly reactive gas from a brand new supplier on Tuesday and pump it into your main production line on Wednesday.
Right.
Every new supplier and every new batch of material must undergo an agonizingly rigorous validation process. You start with isolated lab analysis, then you test it on non-functional dummy wafers.
Just to see what happens.
Exactly. Then you run thermal stress tests using electron microscopes to monitor for atomic level defects. Then you do small, isolated production runs. This entire qualification cycle takes 18 to 24 months.
2 full years just to verify a new gas vendor.
Up to 2 years of methodical, incredibly expensive testing. The contamination risk is just too high to move any faster than that. So even though China is sitting on a mountain of finished WF₆ gas, the rest of the world's chip makers are stuck in a waiting room. They cannot simply swap out the Japanese gas for the Chinese gas overnight without risking their entire production pipeline.
So if we pull back and look at this entire sequence of events, the export bans, the factory shutdowns, the 2-year qualification delays, it feels like we're watching the death of a very specific era of manufacturing.
If we connect this to the bigger picture, the shortage is not an isolated market hiccup. It really represents the structural disintegration of globalization. For the last 30 years, the global technology industry operated on a single guiding principle, which was ultimate efficiency.
Right. The logic was simple. Put the raw material extraction wherever the dirt is cheapest, like China. Put the chemical refining wherever they have the best technical expertise, like Japan. Put the actual wafer fabrication in Taiwan and handle the final assembly somewhere else.
Exactly.
It was a perfectly tuned, highly efficient, interconnected global highway network.
But to achieve that frictionless efficiency, the global market voluntarily traded away supply chain safety and resilience.
And now the bill for that trade-off is coming due.
Big time. The efficient highway is being intentionally broken apart by geopolitical mandates. The sources point out that starting in 2027, the U.S. is officially mandating that defense contractors must use non-Chinese tungsten.
Which is huge.
And at the same time, Japanese corporations like Mitsubishi are frantically investing billions of yen to build domestic tungsten recycling facilities to claw back whatever raw material independence they can.
The U.S. mandate forces the issue permanently.
Yeah.
We are aggressively transitioning from this hyper-efficient, highly integrated global highway into a fragmented, paranoid, localized system where every major power is just trying to build its own walled garden.
And walled gardens are inherently vastly more expensive to build and maintain than open highways.
So what does this all mean for you, the person listening right now? It is very easy to hear terms like tungsten hexafluoride and chemical vapor deposition and assume this is just, an abstract problem for tech billionaires and fabrication plant managers.
It sounds distant.
Yeah, but these geopolitical premiums have real-world gravity. The fact that WF₆ gas prices are up over 200%, the fact that raw tungsten powder has shot up by over 300%, those costs do not just disappear into the corporate ether. They trickle down directly to the consumer.
They always do. The golden era of technology getting magically faster, smaller, and cheaper every single year is hitting a brutal physical and political wall.
When you go to buy your next smartphone, when you upgrade your laptop, or even when you pay for a monthly cloud subscription that relies on massive AI server farms, you are going to pay the toll for this fractured supply chain.
Unavoidably.
You, the consumer, will directly finance the cost of moving these factories, the cost of these 2-year qualification delays, and the cost of these 90% price hikes from suppliers like Foosung.
Which leads to a final, somewhat ominous question we pulled directly from the source material today.
Oh, about the alternative materials.
Yeah. The semiconductor industry isn't just absorbing these costs quietly. They are frantically researching alternative chemical materials to permanently escape this tungsten trap.
And the report specifically mentioned molybdenum as the great hope, right?
Molybdenum is currently looking like the most promising candidate to eventually replace tungsten in these advanced chips.
Okay, so it works just as well.
Actually, it has fantastic electrical resistivity, and it might even simplify the manufacturing process because it doesn't require a barrier layer in the via. On a pure chemistry level, it sounds like the perfect technological savior.
But reading between the lines of these market reports, there is a massive catch.
There is always a catch. Molybdenum, much like tungsten, is highly concentrated geographically.
Let me guess.
Yep. Which begs the question. Are we, as a global tech economy, about to spend billions of dollars and years of intense research and development just to swap one geopolitical choke point for the exact same trap under a different name?
Wow. That is a deeply unsettling thought to leave you with. We are basically re-engineering the microscopic foundations of our technology, only to realize the geopolitical map hasn't changed at all.
Not even a little bit.
So next time you look at your phone, remember the microscopic 200-story skyscraper inside and the invisible, impossibly fragile plumbing keeping the whole thing from crashing down. We'll catch you on the next deep dive.